Investors have decided to give up on trying to recapture lost gains as a result of the falling stock prices globally. So we saw that the sharp rise in coronavirus cases in South Korea and Italy and now Iran has sent the world markets into a tailspin, the JSE being hammered at 2,000 points lower earlier on this afternoon. And I've actually got economist Davi Root to discuss this as well as the budget with us that's coming tomorrow. Thank you so much for your time this afternoon, Davi. Before we get to issues of the budget, which is on Wednesday, my apologies there, let's speak about this bloodbath on the JSE that we saw. I think last week market participants hoped that the Chinese government would have a firmer grip on the virus, and that's obviously not the case, and we're seeing this major sell-off.
Yeah, yes, indeed. I'm having a look at the financial markets, at the All-Share Index now, and it's down more than 4%. And it's, as you've mentioned, it's down more than 2,000 points, 2,500 points. In fact, and I saw the rand is weaker as well. Yes, I'm afraid the reality is that the South African economy is a small, open economy, and that means whenever something goes wrong, it's quite easy to get out of South Africa and go to a place where you feel safer, and typically you feel safer in places like, for example, the US dollar. So I think that is a contributing reason. But having said that, the South African economy, of course, is the most advanced economy on the African continent. We are part of the global village, so to speak. If something goes wrong, if there's some action or some negative impacts because of the virus on countries like, for example, China, South Africa will be affected directly as well, and that is indeed what is happening at the moment. I think the difference now is that previously the effect was mostly on the financial markets, and what is now happening is that the financial markets are not only digesting the first news, so to speak, of the coronavirus, but they're also trying to figure out what the impact on the real economy is going to be. So I would call this the second phase impact of the virus.
Yeah, this major sell-off that we are seeing, Davi, are we seeing it in the form of unit trusts, funds that are invested on the stock market, or are we seeing as a cash that's moving to safer investment options?
Well, we will have to wait to get the final numbers on this, of course, but my suspicion is that this is equities primarily being sold because it's relatively easy to sell equities, but equities can be sold because there could be instruction coming from the fund managers of funds as well. And what's also concerning to me is that the rand is under pressure and that the bond market in South Africa, let me just see if I can find the bonds, that the bond market in South Africa is also a couple of points lower. And the bond market is in fact far more liquid and potentially more volatile than the equity market as well. So this is a combination of foreigners selling out of South Africa, but it's also obviously South Africans also selling because they are concerned about the impact of the virus on the world financial markets and certainly on South Africa as well.
Speaking of the weaker rand and foreigners selling out of the South African market is a nice end to the budget speech tomorrow. This, unfortunately, Davi, may be a trend that may continue after the finance minister paints a very bleak picture of our fiscus.
Yes, I'm afraid that the Minister of Finance is not going to be good news. The Minister of Finance will be delivering a fiscal budget that will point to a fiscus that is very, very deep in trouble financially. There are a number of issues that I think are of particular concern. One is that the economy is hardly growing, and because of that, tax revenue is under tremendous pressure. The fiscal deficit is likely to be close to about 7% of GDP, and the state debt levels has gotten completely out of hand. We are in a so-called fiscal debt trap, or very close to that. And unless the Minister of Finance got the political backing, and I think that is the main issue actually, if he's got the political backing to cut back on state spending quite aggressively. And I'm afraid I don't think he's got that. So I'm afraid the financial markets are likely to react quite negative to the budget, whatever the minister says.
Right, Davi, a lot of the debt that you've just spoken about includes the debt servicing costs, or the interest that government has to pay on its astronomical debt, over 200 billion last year. Because of what we're seeing in terms of expenditure, do you think that government will have to draw on its expenditure obligations in terms of social development and the like, or the likelihood of increased taxes being a bigger option?
Yeah, so but essentially what you're asking here is, where's the Minister of Finance? What's he going to do? Is he going to cut back on state spending, or is he going to try to get more money out of the economy? In other words, an increase in taxes. I'm afraid I can't really see the Minister of Finance cutting back on state spending. The biggest expense items for the Minister are pretty much social kind of expense items, like, for example, education, which is the biggest one, by the way. Not for long. Interest is catching up very quickly. And, of course, that very politically sensitive one, and that's the wage bill. And both these instances, we're talking about the tripartite alliance partners of government, and I'm pretty sure that they're going to put up a major fight if the Minister of Finance wants to cut back on those two expense items. And that really, and I'm sure he's going to try, don't be mistaken, and that really leaves the Minister of Finance with only two other options, and that the one is certainly to increase taxes, and I've got a suspicion he's going to increase the number of taxes, and of course to borrow more money. And I think that is what he's going to do as well. And that's the issue. If you keep on borrowing money, then eventually your debt levels will become reach levels that where the rating agency is going to say, listen, we're concerned about that, and a downgrade is likely to follow. Maybe I should just say that the Minister of Finance, I don't think he's got the political support really to cut back on state spending. But if he doesn't do that, especially on the very unpopular things like, for example, the wage bill and some other current expense items, then eventually we will get into a situation where the financial markets will force us to do this. But that's the political reality, and that's the economic reality in which we find ourselves at the moment.
No, absolutely. Very, very chilling insights there, Davi. Root, an economist, telling us that the finance minister really doesn't have the political will he needs to make those bold decisions, Shahan.